Now imagine turning the equity in your home into life-changing fortune or rethinking what retirement could look like. Unbelievable. Now, if you can stomach selling your home to do this, this could set you up obviously well into retirement. So when I say 29% is the compounding interest rate for Bitcoin, that's over the next 10 to 20 years. Michael Saylor, the Bitcoin evangelist, that's his prediction. Should you sell your home to buy Bitcoin? I know what you're thinking, your jaws just dropped to the floor. This is so emotive for people because I'm Matthew Fraser and this is Crypto Collective. After making millions with Amazon and e-commerce, I realized that if I was starting again today, crypto would be my first choice. I'm here to help you take your first steps and build real wealth. Ready to set yourself up for life? Let's go. Hey guys, welcome to Crypto Collective. My name is Matthew Fraser, and in this episode, well, let's just say it's going to be highly debatable, and that is, should you sell your home to buy Bitcoin? I know what you're thinking, your jaws just dropped to the floor. This is so emotive for people because, as you can appreciate, your home is your castle. But I want to tell you a story about a friend. And look, just to say he's not doing so well financially. He's in his 40s and he's realized that by the time he retires, he's not going to have enough to retire comfortably. Okay. And if you looked at some of the numbers that even, Channel 9 News or even the superannuation funds are putting out, it's pretty dire, right? You're not going to have enough. And now this is not going to be for you. If you want to live on the old age pension, if you think that's going to be great, then you can skip past this video. But if you're thinking that you want to have a little bit more in the kitty and live a comfortable lifestyle, like maybe you want to go to dinner like maybe twice a week, or maybe you want to go on an overseas holiday once a year, then this will be for you. Because according to the superannuation funds or the superannuation industry, for you to retire comfortably, you're only going to get an overseas holiday once every 7 years and an occasional dine out meal, which means like once a month, okay? So that to me is a travesty. It's actually embarrassing for Australia. So listen to this episode because I think you're going to find it really powerful. So today we're going to be tackling one of the biggest financial decisions you might face, and that's whether to stick with your property or dive into the potential of Bitcoin. Now imagine turning the equity in your home into life-changing fortune or rethinking what retirement could look like. If you've ever wondered which is the smarter play for building long-term wealth, this episode is going to blow your mind. So let's dive in. Okay, guys. So my friend, as I mentioned, he's in his 40s and he's not going to be looking good for retirement. He's not looking good at all. And so I just said to him, look, what's your house? Because I knew he had an owner-occupied home. And he said, oh yeah, look, it's about 1.2 million and he's got a mortgage of about 750,000. To me, just quick numbers, he's got about $400,000 in available funds if he was to sell his home. Okay. Now you might say, well, why doesn't he just keep the home and just borrow against it? Now, his loan is actually too big to do that. So let me just give you the quick numbers. Now, just so you know, I actually used to be a mortgage broker. I know I peeled the layers back. A mortgage broker back in my 20s, right? So it's been a long time, but the fundamentals are the same. So $1.2 million is the current value. Now, the bank's going to lend you, you could get up to 90% on your owner-occupied home as a refi. So it's 1.08 million minus the 750. Look, that's going to give him $330,000. So this could be an option. Now, unfortunately for my friend, he doesn't have the servicing to get the bigger loan. Okay, now what does that mean? It means that the bank won't give him the extra funding limit. Okay, he's capped at the moment at the 750. And the reason why is because right now in Australia, the interest rates are by all measures kind of considered quite high. So he's borrowed up initially up to the maximum that he could get. Then the interest rates went up. Now, the bank's not going to come in and take the mortgage away from you, right? As long as you just make the repayments, they don't care. But if he was to go and get the same mortgage today, brand new, he couldn't get it, all right? So therefore, he's definitely not going to be able to get up to that $1.08 million loan, okay? That way he can keep the property. So we have to take that into account. So the only way right now he can tap into the $400,000 that's sitting in his home equity is to sell the house, okay? Most people are not going to do that, okay? But I want to show you the numbers of what the potential gains could be. And I'm telling you, it could be life-changing, okay? So just have a look at it, go with me through the numbers, and then you can decide after that. So let's jump into the computer, look into the spreadsheet, and first of all, let's just see if he was to stick with the property, right? Just kept the property, because most people in Australia look at their owner-occupied home as their greatest asset. And most people think that, aside from their super, and as I mentioned before, he doesn't have much super. Most people think that their owner-occupied home is going to be their retirement plan, okay? Whether they sell that property and downsize and take the difference. And that could be something for you as well, okay? But let me go through these numbers again. So what I'm going to say though is we're going to start at $1.2 million and let's see what the property is going to be worth in 10 years. So I'm going to switch over to my compound interest calculator. Now, I strongly suggest you get your compound interest calculator app. They're absolutely brilliant. You can follow along. We're going to start at 1.2 million. Okay, so in 10 years time, this property is expected to be worth, let's just round it up to 2.4 million. Now, theoretically, in 10 years time, let's just say he hasn't paid a single cent off the mortgage, right? So he's still got 750. So therefore you would argue that he's got a lot more equity. Say 2.4. So he's going to have $1.65 million in equity in that home. And you're going to think that's fantastic, okay? Which it could be. Let's see what it looks like in 20 years' time. So the house in 20 years' time is expected to have a value of $4.8 million. And again, minus the 750, he's going to have about $4 million of available funds. But that's only if he sells the property, okay? And in 20 years' time, I've seen some very interesting numbers, but as far as what you might need to have in super, you might find that $4 million, let's say you sold the property and you downsized, you might have to buy still maybe a $3 million unit or something. So minus the current debt of 750, you're only going to have really $1 million. And $1 million when you retire is not going to be enough, okay? It sounds like a lot now, but it's not going to be in 20 years' time. So let's see what it would look like if he sold his owner-occupied property for $1.2 million. He took the $400,000, the leftover money, and put it into Bitcoin, okay? Now, yes, he's now going to have to go into the rental market. I understand that. But let's just see what the numbers work out. So when I say 29% is the compounding interest rate for Bitcoin, that's over the next 10 to 20 years. Michael Saylor, the Bitcoin evangelist, that's his prediction, right? And that's a base case of 29%. Now, let's say it's going to be that 400,000 is going to turn into 7.2 million, right? Just that number alone, you can see he's basically nearly $3 million up on his property, okay? What it would look like in 20 years' time. Oh, this just smokes it. $130 million. What more can I say? Let's just say that he was renting for 10 years, okay? Now he's got $7.2 million of Bitcoin. Two options right now. One, he sells all of the Bitcoin. He takes the $7.2 million. He's got to pay some capital gains tax now. Let's just say he's left with ballpark $4 million or $5 million, okay? He could take that $5 million now and go and buy a property. But the problem is, remember, he needs this money for retirement. The problem wasn't initially that he needed to buy a house. He needed some money for retirement. So he could sell $7.2 million worth of Bitcoin. He's got $5 million now in his pocket. He could go and buy a property, let's say for $2 million odd, and he's got now $3 million of cash, okay? Now, as we know, cash is trash, and cash is now being devalued by the second to the rate of probably 15% per annum, Okay. So putting it in cash is going to be a bad decision. He would still have to take that $3 million and put it into another asset to keep it growing for when he retires by the time he gets to, 20 years down the track. So in my opinion, selling the Bitcoin would be a bad decision. What he could do though, is he could borrow against the Bitcoin. Okay. And this is really powerful. He could keep the $7.2 million worth of Bitcoin and borrow $2 million only against the Bitcoin and then buy a $2 million property. So now he's out of the rental market. He's now got his owner-occupied property, which he has now paid cash for. And because he didn't sell the Bitcoin, he now doesn't have to pay that capital gains tax. And by keeping the Bitcoin, if he holds it now all the way through to 20 years, he's got $130 million worth of Bitcoin. And his property by that time is probably going to be upwards of $4 million value. Okay. So that in this scenario would be the perfect example of how he could utilize Bitcoin, still buy his owner occupied property within another 10 years, and then have $130 million basically to spend for his retirement. Now, I've just given you the numbers based on 29%, but many people think that the average compounding interest rate is going to be closer to 50%. So this is more on the better case scenario. And keep in mind that Bitcoin has already done over 60% compounding growth rate over the last decade and over 50% in the last 4 years. This year alone, it's been over 100%. So when I say 50% over the next 10 to 20 years, it's not airy-fairy number. It's already done those numbers. Let's have a look. So at 50%, 10 years time, we're going to have a value of Bitcoin of $57 million, right? And then in 10 years time, it would move to $8.4 billion. Unbelievable. Now, if you can stomach selling your home to do this, this could set you up obviously well into retirement. But I'm going to make you think about something even more powerful. What if you could set up generational wealth? At this last scenario of 50%, look, even the 29%, if it got to $130 million, that's an incredible head start for your children, for your grandchildren, and your grandchildren's children, right? This is what we call generational wealth. 8.4 billion is obviously going to kill it. So if we ran this same scenario in 10 years time, he came to, actually, I'm going to add another number in here, right? Just to see what would it look like in 5 years time, right? In 5 years time, I'm just going to put it out here. It would be $4.8 million would be the value of Bitcoin in 5 years. So in this scenario here, you could actually within 5 years even go back, borrow against the $4.8 million and buy even another $1 or $1.5 million home, right? That could be an option to get out of the rental market and still retain the Bitcoin. Because if you sold all the $4.8 million after 5 years, you wouldn't then see the 57 million in 10 years, and you certainly wouldn't see the 8.4 billion in 20 years. So you've got to understand what is the lost opportunity if you were to liquidate all of the Bitcoin. Not only would you have to pay the capital gains tax, but you're going to miss out on the future growth as well. Hey, just quickly, if you're ready to dive deeper into crypto and Bitcoin and build real wealth, join my free Crypto Collective community. It's where I share exclusive insights and strategies and live discussions to help you succeed. Whether you're a beginner or scaling your portfolio, click on the link in the description and join us today. Now back to the episode. Okay guys, so now I've been through a scenario of actually selling your home, and my mate is contemplating it. I can't say that he's actually doing it at this point, but we've certainly run the numbers and he's very interested. And again, like I have mentioned before, you've got to bring your other half along with you. If you're single and this is your decision, then that's fine. You can make it obviously on your own. But if you've got a family, then you've got to bring them along as well. And obviously there's some implications, whether there's children, things like that. But children are pretty resilient. You know, if it means just from moving from an owner-occupied home into a rental property, I'm sure they're going to be fine, considering what could be the potential growth for their future by creating generational wealth with Bitcoin. Well, let's look at a different scenario. Okay, let's say you're a little bit older, you're over 60 years old, perhaps you're on the pension and you would love to realize some Bitcoin growth as well. Maybe it's for yourself or maybe it's for your children or your grandchildren as well. And you've got a property. Now, what I want to talk about is potentially using a reverse mortgage to tap into Bitcoin. Okay, now this, again, not a common thing. However, I do know someone who's in our community, the Crypto Collective community, who has actually done this. And I helped him step through the processes of how to do that. And so in this particular scenario, we're going to look at reverse mortgage in the sense that now what you can do, well, the advantages with a reverse mortgage is you get to keep the property. Okay, you're not selling the property. And the other advantage with reverse mortgage is you don't make a repayment. Okay, so most people, if you borrow against your property with a bank, you have to make an ongoing weekly or monthly repayment. With a reverse mortgage, what happens is the interest that is charged to you is capitalized, okay, which means they just keep tacking it on top of the loan until ultimately you die, the property is then sold and the money paid back to the institution, or you just pay out the loan. Okay, you can do that as well. So in this scenario, what the gentleman did was he took out a $100,000 reverse mortgage. Now, I want to just put something else in this story, and that is that if you go to a reverse mortgage company and say, I want to borrow $100,000 for Bitcoin, it's going to be a big fat no, right? Australian banks and financial institutions have not caught up with what is happening in other parts of the world. Even right now in America, there are companies that will lend you money against Bitcoin to go buy property because they've now cottoned onto the fact that Bitcoin is the hardest asset, it's the best performing asset. It's easy to manage because, of course, if you don't make your repayment, they're holding your Bitcoin, so they can just take the Bitcoin and they're good. They don't have to go and sell a property to get their money back. So they're cottoning on. And I think within the next sort of 5 years plus, maybe up to 10 years, Australian banks will start coming on board. And just as a side note, I noticed that just in recent days, AMP in Australia, superannuation company, has actually bought $27 million worth of Bitcoin to help with their company, their profits into the future. So let's dive into the numbers of the reverse mortgage. Now, you'll find reverse mortgage interest rate is significantly higher than just borrowing for a standard mortgage. So standard mortgage in Australia right now is probably somewhere around the 6.5% to 7%. Reverse mortgage is going to be somewhere around probably 13 to maybe 15%. So let's just say we'll use, in this case, 15%. Now, what I want to do is compare what is the cost of that reverse mortgage compared to if I bought Bitcoin. So I'm going to get my compound interest calculator out. Now, remember, there are no repayments on the reverse mortgage. Oh, and just to cover off something else. So I mentioned before, you can't say to the lender that you're going to go buy Bitcoin. But what you can say is you're going to buy a caravan, a car, renovations. They love that stuff, right? You're allowed to go and sort of blow it on whatever you want, but you're not allowed to invest it. It's ironic, isn't it? So let's say $100,000, 10 years, let's use 15% interest. I'm going to go the higher side. So what is the mortgage going to look like? Your mortgage is going to be upwards of $450,000. Okay. That's what you now owe to the reverse mortgage lender. All right. Now let's see what it looks like in 20 years. If you held it that long, it'd be $2 million. Okay, now let's say you've borrowed the reverse mortgage, same amount of money, okay, but you've now put this into Bitcoin. What is the Bitcoin performance going to be? On $100,000 at 29%, we'll use that number again, over 10 years, is going to be 1.8 million. So what you have to look at here, is it worth doing? Now, straight away, you can see that the 1.8 million is significantly higher than the 450,000 that is owed to the reverse mortgage company. So you've got to think about, it's not so much the interest that you're paying, it's just, is the investment you're making going to outperform the cost? Okay, and in this case it is. Over 20 years, that's going to take it up to $32 million. So even though you owe $2 million worth of basically interest and the $100,000, you've got $32 million. So you're up $30 million in 20 years. Now, if you're 60, you're going to now be 80 years old. Okay. Now, 80-year-olds these days are living, they're living longer than that, right? When you get to 80, you've probably still got 10 to 15 years still to live, okay? And who knows what type of lifespan people will have in another 20 years with the advancements of medical interventions and what have you. Let's have a look at those same numbers though now, but let's use the 50% compounding interest rate. And I think obviously it's going to be a lot higher, but let's just have a look. What is the potential? Well, after 10 years, the potential of Bitcoin is going to be up now 14.5 million. And in 20 years' time, it's going to be $2 billion. This is incredible. This is something that people can do today, right? This is the type of thing you can do today. This type of reverse mortgage loan is available right now. Even at 15%, it seems scary, right? But there is no repayment and you don't even have to pay this loan back at all if you don't want to. But let's say you wanted to, okay? You're like, I don't want to pay the 15% to this reverse mortgage company. That's totally fine. Let's look at the 29% Bitcoin scenario. So in 10 years' time, you've now got $1.8 million worth of Bitcoin. You could do one of two things. You could sell $450,000 worth of Bitcoin and pay back the $450,000 mortgage. That's totally feasible. Or you could borrow $450,000 against your $1.8 million of Bitcoin, right? And pay off the reverse mortgage. And the interest difference is because now you've borrowed against your Bitcoin. Bitcoin right now is about 10% interest rate per annum. So you're now up 5% per year. So that would be something that you could easily do. Then what's happened is you've now removed the mortgage completely off your home. So there's no debt on that whatsoever. And you still get to keep the 1.8 million as it now, in this scenario, goes through to potentially $32 million in 20 years' time. So you're going to say to me now, well, Matthew, that's all great, but what if, I'm in my retirement, I don't have any children, or I don't care about leaving a legacy to them. I just want to use the money myself. Absolutely. In 10 years' time, when you're now 70 odd years old, you've still got lots of life to live. You could liquidate all your Bitcoin of $1.8 million, pay back the 450 and you're still left with about 1.4 million. Or if it does the 50% growth rate, it could be really exciting. You could sell $14.5 million worth of Bitcoin and start traveling the world, right? You could go on a holiday like every month, okay? Money would not be your problem, okay? You could even give up the old age pension. Now, wouldn't that be something, hey? Tell the government, thanks very much, but I don't need this anymore. So there you go, guys. That is it when it comes to Bitcoin versus property. Again, just more things to think about. I'm not saying any particular way is the right way or the wrong way, but in a day and age right now where people don't really understand Bitcoin, certainly not how it can be utilized with property, this I hope helps give you some ideas of how you could help you utilize your property and create generational wealth for you and your family into the future. Because obviously Bitcoin will significantly outperform property. All right, if you've got any questions, please leave them in the comments. If you need any more information about this, you can always jump into my online crypto collective community. It's absolutely free. Find the link somewhere in the description. Look forward to seeing you there. Take care. Thanks for tuning in to Crypto Collective. If you've enjoyed this episode, the best way to show your support is to leave a 5-star review on Apple Podcast or Spotify, and make sure to subscribe to the YouTube channel so you don't miss an episode. You can also find more of me at I'm Matthew Fraser on all social media platforms.